So my question to you is, what would you say about people talking about this whole aspects of diminishing returns, right? So, a lot of people are saying, Bitcoin's going to top out at 100K, 120K max this cycle. Personally, I'm a little bit more biased, but I do see that's the general consensus, this trend. Just like last cycle, the general trend was, oh, we're going to break 100K guaranteed. And we only peaked out at, I think it was like 69,000 or something like that. So what's your take? What's your opinion on the whole diminishing returns conversation?
Yeah, look, there's one, quote unquote model that has been gaining traction on the idea of diminishing returns. And before I have to grab the spaghetti, one thing I will say.
Where is the spaghetti, British Hodl? Where is it?
I can get the spaghetti if you want me to, but I don't want to be insulting. So we'll leave that for Uncle Giuseppe. But look, the point is this: everyone can come up with their ideas about diminishing returns or not, or whatever else. Just think about this logically. Forget whoever's right. Forget how many math degrees someone has. Let's just simplify this to the bare bones. You have an asset that has a 21 million Bitcoin cap. That's it. The thing that's buying it, the thing that's trying to escape energy from one thing to into this thing that's absolutely limited, is completely unlimited. There is an unlimited amount of fiat money in the world, right? Just right now they've multiplied the amount of money that they've created through derivatives and everything else to a $900 trillion US dollar empire, right? There is an unlimited amount of money in the world. And then when you take into account the studies that Bank of America and all these other people have done on the supply dynamics of Bitcoin, that when things start getting tight, the multiplier effect, the bull market multiplier effect, as Bank of America put out last time, is $118 to 1, which has never ever been seen on any other asset humanity has ever seen before. To put that into what I mean by that is, for every dollar that goes into Bitcoin, the market cap goes up by $118 because of the supply dynamics. It's like let's say I got this cigar lighter, right? This cigar lighter, there's 10 of these cigar lighters, but the true market price of this cigar lighter is not based on the full 10 because 8 people are never going to sell it. So it's based on the 2. It's based on how much money is chasing the 2 remaining lighters. That's the issue with Bitcoin. You can't just create more out of thin air like you can do with real estate. You can't just create more unicorns by creating venture capital incentives. You can't just create more gold by digging more gold out of the ground. And now you've got people like BlackRock. BlackRock, I think, has had 1 day of net outflows from their ETF since inception in January. Every single time the market goes down, they buy. Yesterday, they bought 3,500 coins. The day before that, they bought 4,000 coins. This is a behemoth that has come into this game, and I've been shouting about this for a year on my YouTube channel, that BlackRock is coming for everything. They want all the coins, because that's the only way in a monetary network that you can actually control the network. You have to control it by owning a lot of it. That doesn't mean they can screw around with the network, but in order to have influence, in order to have power in this new emerging world, you want to own as much of it as possible. It's like the first person that discovered that property could be built on top of land. Their main goal should be to acquire as much land as possible, because that property is going to be built on top of it. So, not only do you have the Bank of America multiple, which is getting tighter and tighter as people like BlackRock and everyone else keeps buying these assets, and another thing I've been shouting about for a year is that there will be a rotation of owners, and that's what's going on this year. 2024 will be known as the year where the Bitcoin owners rotated from the lettuce hands to the diamond hands. And the diamond hands, we all thought we knew what diamond hands were. The real diamond hands are the ones that are in the BlackRock ETF, are in the Fidelity ETF, are in all these institutional funds, because they never ever need to sell. They already got the yacht. They already got the 2 houses, the kids have already been to school, they already got enough money to do whatever else they want to do. They have to own this to protect the wealth that they've already accumulated. And now they're here. That's the real diamond hands. Those are the BlackRock boys are the real diamond hands. And they're going to come here to try and take as much Bitcoin as possible. And every time the Bitcoin price slides, they're going to buy Bitcoin. And they're never, ever going to let it go. And that's going to cause the multiplier effect to tighten up. And the price is just going to continue going up and up and up. So as far as anyone believing in diminishing returns go, maybe. But there will be a cycle where those diminishing returns, the idea of diminishing returns gets completely turned on its head, simply because of the supply cap. There is a supply cap and there's an unlimited amount of fiat money, and that will cause a squeeze at some point.
I absolutely love that, man. That's a great description. Now, going back to the BlackRock conversation, right? How much did that change the game when BlackRock entered? And I truly believe they definitely influenced. You see the way that Gary Gensler reacted to it, and current administration isn't exactly the friendliest towards the industry. And of course, BlackRock has this tremendous amount of influence, political influence. And you could see that they essentially forced the acceptance of the ETF. And what I would say is, like, what is the significance of that? Like, what is the significance of BlackRock putting essentially the stamp of approval on Bitcoin as an asset? And you see Larry Fink going on the legacy financial media, and he's using a lot of the vocab that us Bitcoiners use on Bitcoin Twitter and Bitcoin shows as well. What was the significance of that, Hodl? How did that change the game?
Yeah, look, a lot of people don't realize, right? A lot of people in retail finance don't understand how big the institutional financial world is. The top 500 asset managers in the world control $150 trillion of assets. To put that into perspective, around 20% of the volume on the US markets is retail, right? So 80% is institutional. All of those 500 asset managers and every single person that works in every single office of each one of those financial of asset managers takes direction from BlackRock. So for the fact that Larry Fink is out here saying Bitcoin is a flight to quality, we're seeing people, move towards a 1 to 3% allocation, et cetera, et cetera. This is where the world is going. It's the second that BlackRock filed that application, if you want to go back and look at the history on my YouTube channel, the second they filed that, I started screaming, this is happening. Because I think they had about 566 or 567, so I can't remember the exact number, but just to put this into context, let's say they had 567 applications for an ETF. There was only one denied. And the one that was denied, the entire industry was denied, and no one ever applied for an ETF ever again. So they've got a pretty solid track record on things happening. So as soon as they applied, I knew it was happening, right? And by the way, the ETF was my main goal. When I first understood Bitcoin, because I thought it was a scam right from the start, right? I thought this whole thing was a scam. It doesn't make any sense. I'm in gold, et cetera, et cetera. And then one time I was listening to the Bitcoin Standard, and he mentions the idea of stock to flow. And with my gold experience, the moment he said stock to flow, I don't mean the price model or anything like that, just the idea of stock to flow, it was like the matrix just opened up for me. I could finally understand what was going on here, and I realized I was looking at Bitcoin like an equity when I should have been looking at it like a commodity. And the moment that happened, everything sort of made sense for me, and I bought my first Bitcoin walking from where I heard that message to home. I had already owned my first Bitcoin because it was like the light bulb just went on. But the point is this: BlackRock is the difference maker. BlackRock is the thing that's going to open the floodgates. BlackRock wrote a letter to all of their companies that they invest in. By the way, they own every single piece of every single company in the world, pretty much. They wrote a letter to them and they said, right, you now have to start caring about the weather, right? And guess what? Every company in the world started caring about the weather. So guess what happens in the next letter when they say, you now have to start caring about the environment, and the only way you care about the environment is to support Bitcoin mining. Every company in the world starts caring about Bitcoin mining. What happens when BlackRock says, in order for you to care about the environment now, you now need to own some Bitcoin on your treasury? Every company in the world starts owning Bitcoin on their treasury. This is the power of BlackRock. They understand how to move capital to get things done in the world. In addition to that, Larry Fink has a very, very long history of taking assets that were like Bitcoin, were just properties, securitizing them and building debt markets on top of them like he did with mortgage-backed securities in the 70s. So this is all coming. The game plan is very clear. In fact, when they said that, I said we're 3 months away from a major publication saying that Bitcoin is now good for the environment. 3 weeks after they did that, KPMG put out the report saying Bitcoin may be good for the environment, because this is how the game works. They knew they were going to do this. They knew it in 2018. They knew it in 2021. And of course, when they filed, they knew exactly, they were ready to go. So that's who you're competing with at this point. You're no longer competing with the morons on Twitter, right? You're no longer competing with the people like me and Nico shouting at you to get Bitcoin. You're competing with the people that are going to ring their multi-billion-dollar clients up and say, hey, Larry wants you to get a 1 to 3% allocation in Bitcoin. And they're going to say, okay, that's the end of the conversation. That's who we're competing with, and that's how important and revolutionary and impactful BlackRock has been to Bitcoin.